Now by our featured guest of the morning. He's Colin Cieszynski, Chief Market Strategist at, SIA Wealth Management. Colin, thanks a lot, first of all, for joining us. Great to have you back in our studio with us.
Thanks, it's great to be here.
Some quick comments. We are going to hear more and more about housing and housing supply over the next couple of years. So any quick thoughts on the government's plan to cut GST on the building of rental accommodations, a move that sounds like it will be matched by the government of Ontario?
That's an encouraging start, and it's one of the ways that governments can move quickly to try and address problems is adjusting taxes. That's something that they can do quite rapidly. But the important thing is that this is a first step, and that over time there needs to be more looking at regulation, looking at incentives for how do we provide more rental housing, and perhaps also the incentives between short-term rentals and longer-term rentals, and how do you incentivize longer-term rentals for people that are to use as their homes over months and years. And so it's an encouraging first step. There's a long way to go. It's taken a long time to get into the mess that we're in. It's going to take a while to get out of it. Just one thing doesn't solve it. You can't magically solve any of these problems with one move, but right. At least it's a sign that governments are prepared to start making the moves that they need to make to dig out of this hole.
He's also taking aim, on grocery prices. It sounds like there will be more hearings in Ottawa on the subject of grocery profits at the big grocers and whether or not they are gouging Canadians. Do you have any thoughts on what those types of discussions will reveal?
It's hard to say. I mean, groceries traditionally have been more of a low-margin, high-volume kind of business. So how much is driven by, there's a lot of factors that go into it, right? There's commodity prices, there's transportation costs, there's fuel costs, there's a whole thing. And it's, as with the housing market, it's a big, complex system that needs investigation. And there's how do we get prices back down and what happens when you have a commodity price spike and then the commodity prices come back down? They don't always seem to quite come back down as fast as the commodity price does. So how do we work that through to ensure that there's fair pricing for everyone throughout the system? Okay, let's move on to something that you're expert in. That's seasonality. You track the markets on a seasonal basis. This September, we often hear one of the weakest months for the stock market of the year. So far in September, the S&P 500, the key benchmark in the United States, has essentially drifted sideways. We're halfway through September now, and the TSX composite is actually up about a percentage point and a third so far in September. Is this a better September than we typically get in stock markets? Yes, it has been so far. Historically, we find that when people come back from Labor Day and start to reevaluate their portfolios and how businesses are doing relative to expectations and the economy, that we often then see a lot of rebalancing and often a sell-off in markets. And we only have to look back a year to see that sometimes these sell-offs can be pretty substantial. And but this year compared to last year has been quite moderate. It's been more of a rotation of capital. We've seen money leaving sectors, mostly the interest rate sensitive sectors, because rates have held up. So financials, utilities, real estate have struggled, whereas energy has done really, really well with energy prices rallying.
What the ARM IPO yesterday did well. It almost harkens back to the good old days of IPOs when stocks took off as soon as they hit the stock market. Is that telling us something about market sentiment right now?
It is. It's really encouraging to see that an IPO like this did well out of the gate. You don't want to see them crashing, and you also don't want to see them soaring to the 100% gains on the first day. You don't want that either, because that's a sign that perhaps things are getting a little bit too frothy. But a nice positive gain to start the market is encouraging. It means that investor confidence is out there, but at the same time, it's not over exuberant either. And
what's your take on the recent flow of economic data? We got in the recent past, we've had U.S. inflation numbers, which came in essentially in line with expectations, and U.S. retail sales numbers, which came in quite stronger than expected.
Yeah, so far things have generally been positive, and it's a sign that that hopefully it looks like the central banker's goal has been to try and engineer some kind of a soft landing and avoid a deep recession while still getting inflation under control. So far, it looks like they've managed to be able to do that. At the same time, though, we're also keeping an eye on things like the airlines coming out and saying that their costs are gone up and their profit margins are getting squeezed, or the automakers going on, the employees of the automakers going on strike today, demanding higher wages to keep up with inflation. So this is kind of the second phase of inflation now, the wage side that is an issue that's going to be facing central bankers and others for some time. Is the first phase where it was all commodity driven and then that came back down. But now we're seeing it on the stickier wages and services side. And that might be a little more challenging to get back down.
Okay, I want to squeeze one more thing in. We have less than 60 seconds left. I know you've been watching uranium and how it's been priced lately. What's the takeaway here for investors interested in uranium?
Uranium's been really interesting because usually it's been a fellow traveler with other alternative energy groups such as solar and wind and other things like that. But in the last 3 months, we've seen uranium take off and we've seen the other alternative energy sources absolutely crash.